Well, hey there. Welcome to the Animal Donut Channel. My name is Jeff. Today I want to talk with you about investing. Specifically, I want to talk with you about investing in the stocks of energy companies. Now, I made a video a little earlier this year about a couple of different ETFs that invest in the energy sector. And as some of you know, I created a fictional ETF, called it ANDO, the Animal Donut ETF. And this was just for fun, mostly because I've been learning about trading this year. I've been learning some techniques of, traders, people who allege to be able to make money over time, kind of getting in and getting out of the market, getting into trades, choosing times to enter, choosing times to exit, allegedly making money consistently, but I don't know. But I've been learning about trading, and in this whole process, I started to learn about trailing stop losses, which are, I think, valuable perhaps if you're a trader. And I should just say, this is not financial advice. I'm just sharing with you guys what I've learned. Trailing stop losses can be really useful. They protect you on the downside. If a stock that you've bought goes up and up and up, and then suddenly it comes down, you can decide how much that stock comes down before you sell it. And it's done automatically. But what happened was I made this ANDO ETF. I chose about 5 different stocks. For example, Vistra Energy was one of them, Constellation Energy another, Transmedics Group, Axsome Therapeutics, Modine, and Eaton. That might actually have been all of them. Anyway, I used these trailing stop losses, and what happened was these stocks did really well in the months after I bought them. I bought them, I believe, right at the beginning of May of 2024, this year, a few months ago. They went up, 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 and then, they came down. They came down. And I was, it doesn't really bother me because I don't get too emotional about things. But what bothered me was that my brokerage sold them as I asked them to. When I placed the orders, I went back in and placed that trailing stop loss. So what happened was at one point, the stocks had gone up a whole bunch, and then they came down, and they came down 20% and triggered stop losses. So this is what's known as being stopped out of trades. You guys probably know this, but in case you don't, it just means that as directed, the brokerage sold your stocks so that you wouldn't lose a lot more. Most of the stocks that I bought, I got stopped out of, meaning they went up a lot. Like Vistra went up a lot in price, so did Constellation, so did Eaton and Modine. And then about 2 months ago, the market corrected a bit and they came down 20% off their highs. And as instructed, my brokerage sold those stocks. So what happened was I wound up with a bunch of cash in this account. And then I had, a couple of stocks, my Axsome Therapeutics and some Transmedics that did not come down enough to sell off. They were still in my account. But, I was thinking about this for a couple of weeks and it bothered me because I consider myself an investor more than a trader. I'm not a trader, but I like some of the trading techniques, or I like learning about them at least, the mindset. And what bothered me is I really like Vistra and Constellation, and I didn't own them anymore because I got stopped out. So I realized, this short-term price fluctuation thing where you are really focused on the fluctuations within, weeks or even months, it's too short-term for me. I'm not able, I don't think, to reliably jump in and jump out of stocks, consistently picking the right times. So what I did was I thought a bit about Warren Buffett and his approach to investing. Now, there's a method to my madness, so stick with me here. When I was talking about ETFs that invest in energy, one of them was called UTES. That's the ticker symbol. I think it was the Virtus Reeves Utility ETF. but I remember the ticker UTES. So the top 3 holdings there, the first one was Next Era Energy, NEE. And then the next holding was either Vistra or Constellation. I don't like paying a big, management fee just to have somebody, buy the stocks and hold them for you. I like the stocks, but I probably wouldn't buy them using the ETF just because I'm more of a buy and hold person, and why pay a management fee? If I were in Buffett's shoes, I would have to buy the Next Era Energy for Berkshire because, with a company like a smaller company, you can't really buy a meaningful amount of a stock without really moving the stock price. But with a big company, you basically need to hunt for elephants. So Next Era Energy is a really big company. But Buffett, if he said that if he were starting out, if he were just getting started with investing, and Munger has said this too, Charlie Munger, his partner, they would look for smaller companies. Small companies, get them when they're small and let them grow. They'll tend to grow faster than, companies once they get huge. And in my view, Next Era Energy is one of those huge companies. This is a company, they're so big, they're kind of like I would consider in the slow grower category. They're paying a dividend. They're probably going to grow, 12%, maybe 15% a year, which isn't bad. But I want a company that has a chance at growing faster. Now, of course, there's more risk involved investing in small caps and in mid caps than large caps. They tend to be more volatile. But I find personally that I can diminish some of this volatility in any one stock by just buying like a portfolio or a collection of them. Again, this is not financial advice, just sharing with you how I think about this. So for me, it's okay to invest in small cap companies or mid caps. So I like Vistra a lot more than I like Next Era. And I also like Constellation, which is also smaller than Next Era. So, I did some research about these companies. I listened to interviews with the CEOs. I found podcasts where they were talking or earnings calls. Anything I could learn about these companies. And I really like the CEOs for both Vistra and Constellation. Vistra is about half the size of Constellation. So when I started investing, I think Vistra was a $30 billion market cap. Constellation was about $60 billion. The stock prices have gone up this year, so I'm certain that the market caps are probably closer to like 40 billion for Vistra and maybe 70 for Constellation, maybe more than that. Vistra's smaller, Constellation's larger. And a thing that's real difficult, I feel, for an investor, for me as an investor, is to pick the stock in a sector. I can't know everything about Vistra. And if I were to go kind of heavily into that one stock and it didn't work out and the stock went down, I'd be very frustrated. But I feel like I can kind of diminish that stock specific risk. I can diminish that risk by buying both Vistra and Constellation. So that brings us back now to me getting stopped out of both of those stocks. So I thought about it for a while, and I thought about something I read in these books about trading. I read Market Wizards, which are really cool collections of interviews with successful traders. These are books by, his name is Jack. So funny. Schwager? I think that's it. Anyhow, I've been reading these books. One of them, and it might have been Mark Minervini, could have been another. Doesn't really matter. The key takeaway was sometimes you'll enter a trade and you might get stopped out of it, but you shouldn't get upset or frustrated. You just might have been like early. You might not have kind of picked the right time to enter the trade. So rather than decide, oh, I got stopped out, I'm not going to buy that stock again, think, well, maybe I didn't enter at the right time, but be kind of like neutral about it. Think about what you want to do next. Write it down in your journal. That's exactly what I did. I just wrote down in my journal, buy back in, get the Vistra shares, get the Constellation. You love those companies back in May. They went up a lot, they came down a bit, and you got stopped out. So I will tell you, on the 3rd of September, which was just 3 weeks ago, we're still in September 2024. On the 3rd, I took all my cash, all the money that was in that brokerage account from the sale of those stocks, and I added some more, and I went in big into Constellation Energy, into Vistra. I bought back my shares of Modine. I bought back my shares of Eaton Corporation, and I bought back my shares of Transmedics Group, which some of them had sold off. So I was pretty decisive, but I feel as though sometimes you just have to have the courage of your convictions and go, this made sense to me. This still makes sense. I'm going to do this. I've been very focused on my research and on learning. I have come up with some new stock ideas in the past month, and sometimes you just need time to kind of focus on those things. And I feel as though when I'm making videos, I'm coming up with ideas of stuff a lot of times that I think you guys would be interested in. And over the past few weeks, I've just been focusing on what is the next stock to buy. Over the past year, I've been exploring lots of different sectors. As you guys know, if you've been watching a while, I really focused on semiconductors starting at the beginning of this year. And then I started learning about some energy companies and also a couple of pharmaceutical companies. And I just feel as though my learning got a little bit diffused, kind of spread among many stocks. So what I need to do right now, and what I'm doing right now, is figuring out, okay, what do I know most about? What looks most promising to me? Which stocks am I investing in right now, or at least in the next few weeks, to carry me through not only the rest of this year, but on into the several years to come. And I want to be really thoughtful about something. And there's a concept, an idea that Warren Buffett talks about, this punch card approach. I just figured out more about what it meant. So Buffett says you should pretend that every stock that you buy is like a punch card. But just imagine that every time you buy a stock, you get a hole punched in your card, and in your whole lifetime, you can only buy 20 stocks. And so he said, if you think this way about investing, I promise it will improve your results, because you will think a lot more about any stock before you go ahead and buy it. And I thought this way for a long time. I kind of followed his advice, but I think I was almost too slow or too methodical, meaning I spent like a long time and I'd only invest in like one stock a year, or maybe over the course of a few years, I only invested in like 2 stocks. And in some cases, I didn't pick the best stocks. But what Buffett, what he really meant, and I figured this out because I listened recently to a talk that he gave during one of his Berkshire Hathaway annual meetings. And what he said, the part I missed, is when you do buy one of those stocks, one of those punch card stocks, you want to go in like full force with a lot of money. You don't want to just make little bets. So, for example, if you have $10,000 to invest and you get this really great idea and you think this is an excellent company, don't put $500 into it, or don't just put $1,000. He said, because the truly great ideas you will come across as an investor they don't come along that many times in your investing career. So if when they appear, you just go in with a little bit of money, you're going to not get as good results because, your stock might go up 75% or 100%, but if you only put a small amount of money, then it's not going to give you the kind of returns that will really make an investing lifetime stand out. And, you know, of course, Buffett and Munger, they're not guys who got rich incrementally. They didn't do little bets. So that's really the message that I have kind of focused on during the past few weeks in considering my plans moving forward, which is, in a nutshell, spend more time learning, save up cash, and when you've made your decision to buy stocks, go in with more money. Don't be stingy. Don't be scared. Don't be tentative. And if that means you have to wait a year or 2 years or 3 years to go in big, fine. But make sure that when you do commit your money, you do so in a meaningful way. This goes totally against everything taught by the modern portfolio theorists, the efficient market hypothesis people who say buy index funds, diversify, diversify, diversify. Munger and Buffett, they are about running a concentrated portfolio, saying you don't have to own a lot of stocks in your lifetime. If you find 3 or 4 great companies, but you go in big, you're going to do great. Much better than owning 100 different things where you barely know any of them very well and you have no real expertise or circle of competence when it comes to any one particular stock. So those are my thoughts. That's what I wanted to share with you today. So the Animal Donut portfolio now has 7 stocks in it. It has Constellation Energy, Vistra Energy, Modine Manufacturing, Eaton Corporation, Transmedics Groups, Axsome Therapeutics, and the newest addition is Monolithic Power Systems. That should be 7 stocks. Do you guys invest in any of these stocks? If you do, let me know in the comment section below. I would love to know which one of these companies appeals to you, what is interesting to you. I, as you know, believe that energy is going to be a significant part of the whole build out of semiconductors, of GPUs, and of artificial intelligence. And as much as I appreciate solar energy and wind energy, other forms of renewable and green energy, I think that nuclear is also a green energy, and it's constant. It doesn't require the sunlight, it doesn't require the wind to pick up, and it can be depended on by anyone running data centers, computers, to provide a safe, clean, constant source of energy. So that's why I have gone in pretty heavily and plan to continue investing in these particular stocks. So let me know what you think in the comments. Thank you so much for watching. If you have not yet clicked the like button, please like this video. And if you're new to the channel and have not yet subscribed, I'd love to have you as a new subscriber. So thanks so much for spending time with me today, and I will see you in the next video.